Right. Let's get into this now with Corey Johnson, Epistrophe Chief Market Strategist, and Doug Flynn is back with us, co-founder of Flynn Zito Capital Management, certified financial planner. I say back with us because Doug was rudely interrupted earlier by the King of England, which you don't see. How about that, Corey? You've been of all people. He was going to be on with us to talk to the Fed, and here comes the King.
I've been interrupted by worse.
Well, yes. So we'll give the first word to Doug. What does today mean?
Today means that it's exactly what we said yesterday was going to happen, which is the quarter-point cut and the forecasting of 2 more before the end of the year. I think they made that pretty clear. I think what was interesting today to me was that they did note the weakness in the labor market, and with their dual mandate of that and inflation, perhaps the focus is really finally shifting to the labor market, which there is more of a concern than that constant refrain they've been talking about how inflation was going to kick up. And he did note that even if inflation does tick up a little bit because of tariffs, it's short-lived. So all of that came through, and I think the market got exactly what it was expecting, which is why it kind of did a whole lot of nothing today is what happened.
I believe Jay Powell said short-lived, which is, I've told you, Doug, that to me, that's the correct pronunciation. Short-lived, short-lived. Anyway.
I stand corrected.
So Powell, obviously, there's all this political stuff too, Corey, about, who's on the board, and Stephen Myron, Trump's guy, who's on the board now, being the one that dissented in that he wanted even a bigger rate cut, 50 basis points as opposed to 25. Okay. Here's what Powell said, though, kind of to Doug's point about his thinking on all of this. Let's listen to him, and then you can come back and tell us what you think it means. Here's the chairman.
There wasn't widespread support at all for a 50 basis point cut today. I think we're now reacting to, to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
When he's dismissive there at the beginning, says there wasn't widespread support. There was one guy, it was Myron, who's Trump's guy, who wanted to do that.
That's what we think,
Yeah, right, that's supposedly. What do you think?
Well, I think, look, when people, nerds like me, stare at the stock market all day and our screens are blinking green and blinking red and things, and we talk about the market as if it's the economy, and it is not. And what the Fed is responding to here is the economy, and the economy is slowing down, and they're concerned, and they want to help the economy with lower interest rates. So they're concerned about the fact that unemployment is up to 4.3%, the worst it's been in about 5 years. We're concerned about the fact that core inflation is at 3.1% and headed up even before a lot of these tariffs take effect. They're concerned about the fact that we've added only 22,000 jobs in the last quarter, and we heard so much that if we shut down the border, jobs will flow to, job growth will grow in the United States. Well, we've shut down the border and job growth is shrinking in the United States. The economy is slowing down, and there's concern of the Fed, and that's why they are lowering rates. They want to help the economy to grow. They don't want us to go into a recession, and yet they're dealing with these persistent and worrisome inflation rates coming ahead. So it could be this tricky situation economists call stagflation, where you've got inflation rising. So you don't want to encourage the economy. We've got the economy slowing down. And it is the great fear, because that takes away the greatest tool the Federal Reserve has to help inspire the economy to do well. So we watch this, these employment numbers, these productivity numbers, the GDP numbers, we watch these with bated breath because we want to understand what's happening to the consumer. And the other thing I'll throw out here, and Powell made mention of this, and I'm sorry, I'll be real brief, but economists are talking about a K-shaped economy where people with wealth are doing better. The stock market is going up. Wealthy people are more able to avoid inflation, but poorer people are feeling the effects of this. They're feeling the inflation. They're unable. There are more jobs, more people looking for work now than there are jobs available for the first time in a long time. And that effect is felt more by poor people. It's felt more by people of color than anyone else in our economy.
No, I mean, I think you're right. I mean, people who have assets, who own stocks, Doug, you and I have talked about this, or homes in many cases, are in a better position and feel better about their situation for obvious reasons. I don't think there's any doubt about that. What we do about that, that's kind of the policy discussion. Like on housing, we could talk about that for a few minutes. I think it's worth talking about. Like I have a mortgage rate chart here on the tablet, pop it up in front of me, about mortgage rates, which are not necessarily, Doug, as you know, tied directly to this overnight bank lending rate that the Fed controls, but now finally coming down a little bit. They're in the low sixes. Okay, so maybe does housing start to move here a little bit? A lot of people, I think, would have moved out of their homes. A lot of people in this situation have said, I'm not going anywhere. I refinanced after COVID. Now you got a 3% rate or whatever it is. So does housing start to move? What do you think?
Well, some good news in that on that front. You've got the lowest mortgage rates in 3 years now, which is a really good sign. But they have really underbuilt, and so that's kept the prices up too high because we don't have enough inventory, and so that's job related. And so I think what happens is the lower those mortgage rates go, and today is not going to affect the mortgage rate directly, but with those future decreases, it will push that lower. And I think once you start getting the rates into the fives should we see a 4 handle on a mortgage rate, I think really money starts to move, people start to move, jobs start to move. And I think that was part of the big impetus for trying to get the rates lower in the first place. Now, of course, you need all those other reasons to justify and warrant it, but there are a lot of downstream effects to having those lower rates when it comes to the housing market, because it really has stalled there and people are priced out of it. The affordability is just terrible, although it's starting to get slightly better with the lower rates.
Yeah, do you think, you agree with that? Would you add anything to that, Corey, to address the problem, which you rightly pointed out, which is this K-shaped economy that you talked about before?
Lower mortgage rates will bring more money to the housing sector, more money to the housing sector, even on the margin, will lead to more houses being built. But who's going to build them? There are fewer immigrants in this country, and those are the people who have been building a lot of the houses. What are you going to build them with? Is it lumber from Canada that's facing higher tariffs? Is it steel from China that's facing higher tariffs? So the costs of those houses are going to go up because that's some of the places that inflation are going to hit. So I'm trying to tie this to the policies. We start to think about the choices that government makes and what we're doing to encourage things. Lower rates helps. Cutting down on immigration, legal immigration, cutting down, raising the price of the inputs that go into housing, that doesn't help us build more housing either.
Powell talked about that, Doug, a little bit today. I mean, there is, even if you support the president's approach on immigration, which a lot of people do when it comes to shutting down the border, and even if you don't want to get into a wider discussion about, how he's going about it in other areas, we've talked about it with immigration guests, there is an economic component to this. And Corey's right, and Jay Powell talked about it. It's just a question of how big it is, right? Like, it will show up. It's already showing up. And how do we quantify it? And, that could come back to bite the president. Not, necessarily, I'm not just talking about the humanity of the whole thing. I'm talking about the economics of it. How big a deal is it, immigration and economics, Doug?
I think it's a big deal. I think a lot of the job numbers that you're going to get, they don't ask for citizenship in calculating unemployment and other data. So you get a sort of a masked picture on what's really going on. Some of the numbers might look better than they actually are if you don't have the people that are even here to be looking for jobs. Now, of course, we all want legal immigration and the people to do this work, and so that system is completely broken, and it's not being fixed by getting rid of the the illegal part of it. But so that all has to be solved, and I don't know that they're going to solve that. So there are going to be some impact by not having the people do the jobs there, and so perhaps then some of those jobs do come back around to other people who want them, but there's just not enough people to do that, and so you are going to have a problem with the building of it. I think there are a lot of downstream. There's always there's an input and an output. And so you might have a good input over here, but it's going to come out in 3 different ways on the other side, not all of which are going to be good.
Right. It's a numbers game. No matter what you think, what your political persuasion is or how you approach it from there, it's just there's just a reality you have to deal with. So then, as kind of a final point on this, Corey, what does the Fed do? Because then you keep cutting rates and you risk some of those issues that you brought up earlier with the economy. You talked about stagflation and other things, but it seems like they're going to keep cutting rates a little bit, which will make certain people happy, and question about how much.
Yeah, and the question is why also. I think there was concern. I was talking to some money managers here on the West Coast earlier this morning, and there was concern that if they cut actually more, 50 basis points, it would have been like a 4-alarm alert, and maybe the Fed's seeing something in the economy that we're all starting to see hints of, and that would have been more worrisome. And so, we will watch what the Fed does. The Fed has given us some signals of what they think is going to happen in the future. They are very humble. I think Chairman Powell said something to the point that economic predictors are humble, and they're humble for good reason, because they've been often humbled. And I think that we don't know what things are how they're going to play out towards the end of this year. So the Fed thinks they're going to cut a few more times, but we shall see. And if they have to cut a lot, that's nothing to look forward to, because that means economic conditions are getting bad, that it's good, that unemployment's up, that productivity is worse, that jobs are harder to find, and people are having a harder time, which nobody wants.
Good balanced talk. 2 smart guys talking about it. And see, Doug, you hang around an hour, you get to talk to Corey Johnson, you cut off by the King England.
Good stuff.
And it all worked out right in the end. Thank you both, Corey and Doug.